I get this question a lot. If you should trade when you're investing, or should you hold on to your investments? And there is no right or wrong answer for this one, and it depends on several factors. When you're holding, your money is working for you. When you're trading, you work for your money. And that's a clear distinction between trading and holding. In this case, it's called hodling. So let's recap those 3 points that I brought up. Number one, what's your objective? Is it to grow your asset, or is it to have an income? And that's dependent on whether you have more time or more money. And consider the fact that when you trade, you do work for your money, versus when you hold, you let your money work for you. And each one's going to have a different answer. So you have to be very honest with yourself with those questions. And at the end of the day, whichever answer you're comfortable with is the one you should go with.
Long term. People with less knowledge and more money than you set the price in the market. Over time, they will get the knowledge, you will get the money. Right? Over time, what really matters is the underlying fundamentals. Right? And in the near term, you have panics. And the panics cause like risk-off events. Like people panic because inflation is really high, and so they sell the inflation hedge. Huh? Tell me that again. Inflation is really high. The government can't get it under control, so there's a panic. So people sell the inflation hedge. And then the journalists and the modelers say, well, look, We've run a statistical model for the past week, and it shows that when inflation is high, people sell Bitcoin, so it's not an inflation hedge. And you look at it since COVID, you can see it's up 229%, and it's pretty clear that gold is not an inflation hedge, and silver is not an inflation hedge, and stocks are not an inflation hedge, right? And bonds are not an inflation hedge, and currency is not an inflation hedge. That's pretty obvious if you look at it over 2 years, but if you shorten your time horizon to 2 weeks, you can come to the opposite conclusion. But in my opinion, it's pretty foolish to come to that conclusion. And you can't be right in the long term and still be right every day in the near term. Right? Like Jeff Bezos had to look stupid 6 times in a row in order to be the richest man in the world. Eventually, one day you'll wake up and some country will buy $20 billion of Bitcoin, and it'll jump by a factor of 3. And that'll be the thing that's going to drive the price long term is going to be intelligent regulation. As the SEC, the FDIC, Treasury, as FASB, as they issue guidelines, as big institutional investors and big banks get into the space, as countries get into the space, I think that'll drive the price up. And I think in the near term, trying to guess what the price is going to be is a losing proposition. So I just don't think it's a good idea to even try. First of all, you have to separate. There's 19,500 cryptos. There's one Bitcoin. I think that most regulation is going to create turmoil for the 19,500 cryptos. There's going to be a shakeout. So regulation generally is good for Bitcoin. And it's difficult for the rest of the cryptos, right? They're on the opposite side. But it is possible to construct a very profitable crypto exchange and a very profitable cryptocurrency, a stablecoin business, and a very profitable set of crypto securities with regulation. It's just that's going to be a lot more work. I think that generally just about all regulation that's contemplated anywhere in the Western world is going to accelerate mainstream adoption of Bitcoin. Bitcoin should get 10x bigger and then 100x bigger, and the thing holding it back is the fact that there's no regulatory clarity in the crypto industry. So yeah, I'm not really concerned about the regulation.